Hello guys, welcome to another market review. We're gonna kick off by looking at the dollar index. And this is the second time I'm recording this video because I recorded the previous one without audio. So yeah, I hope that this one will be quicker now that I have everything in my mind and it's quite recent. So the dollar index, I think, is the place where you want to be paying attention for the next quarter. So when you look at the weekly time frame, we already mentioned that we had a weekly bullish divergence playing out because we were making new lows while the RSI was just trading higher. And also the candles here, where this kind of candles where you have big wicks and it just looks like a liquidity grab from a key level where we had a nice impulse to the upside. So that's one aspect. Now you look at the monthly time frame, and let me draw this line here and let me get rid of this so that this becomes simpler. We've been spending nearly a year. We've spent a whole fucking year trading in this range, right? With a weekly bullish divergence, and this level, the 100 level, has kept price from trading higher. Every single attempt has been sold, and we've traded into the other side until the March candle, where we just pulled back a bit, and then the June candle has closed above it. So when you've consolidated for a whole year and you break out, you would expect continuation. Doesn't matter whether you have the macro read that the euro should be going higher. It doesn't fucking matter. This is what price is telling us, and this is what I'm gonna be focusing on. So we could draw a box somewhere around here, right? And the current monthly expansion is done. So we only have 2 more days for the June month. And I think that maybe Monday and Tuesday are days are not worthy of trading. They tend to be very choppy and they lack direction. We're looking for direction. So I think waiting for the new monthly open, which will be on Wednesday, is the play to look for. So with that in mind, this means that we have a breakout on the dollar on a monthly time frame, and the impulse should take us higher into the 103 level at least. That doesn't mean that we go in a straight line, and we have a very decent level here to play about. So if the dollar came into this region, I would look for longs on the dollar. That means short EURUSD, and then you would look for the expansion. It doesn't really have to trade into this level or this region. It could just pull back. It could be trade higher, pull back a bit, chop here, keep consolidating until it keeps breaking out, right? Could do something like this. It doesn't have to be textbook, but this is the idea, and I would be very surprised if this ends up being a deviation because it's a monthly breakout where we've been locked inside a whole year. So we really shouldn't be fading this, in my opinion. unless it really gets inside the range again, back below this region, and then you look for an extension lower. But you would need confirmation for that. So this is the play on the dollar, and that gives us triggers on the Euro USD. Euro USD, again, we've been trading inside this range for a whole year, and we've traded the extremities many times. And this is just another attempt. So I think there's not a very decent risk reward to engage short here right now. I think it pays off to maybe look for longs here, because we are at the range lows. You're not going to short here, right? Unless you have a very, very decent reason for that, just like on the dollar longs. So I think this might do something like this. From here, it maybe then, lines up with the 100 level on the dollar and starts selling off again. And then we finally break out of this range to the downside, which will line up, if the dollar trades into the 103 level, that should take the euro into the 112s at least. Maybe even lower. So another reason why I think that we should consider the longs on the first half of the July month is that we have this big ass imbalance there. So this is a magnet for price, and I would be very surprised if this just dumps without distributing somewhere inside this region. Because it's the same thing that we saw here. Big ass imbalance created by the NFP print. Price trades into the imbalance and then just fucking dies. So again, I think this would be something to look for. And if this happens during the first half of the month, the July month, right? You could be looking at the high of the July month, and maybe then we could see the expansion of that candle once we break inside the new monthly open, wherever break below the new monthly open, whatever that happens, we will know by Wednesday. So I think the next market review is going to be really, really important, because we will have 3 days worth of price action, 3 daily candles of the new month. But yeah, I would be looking for bullish setups, primarily on the Euro USD, targeting 1.153, just into the imbalance. And from here, I would be looking for distributing from distribution patterns and signs of exhaustion, shooting stars, various engulfings, something like that, So that's Euro USD. I think AUDUSD is a very interesting pair to look at right now, because the quarterly is gonna close like a massive shooting star, and I would be very surprised when you look at the daily structure. You look at the consolidation that we had just at the yearly open, and then this inefficient move to the upside, which we haven't filled. So this kind of looks like a head and shoulders pattern, and the bounce I'm expecting on the Euro USD could be something similar on the AUD, and we find the top here and then we sell off. So this could be the first half of the month, and this could be the second half of the July month. On the daily, I don't think this is as clear, but maybe we go through the 3-day, you will see what I mean. Yeah, this is, or the weekly shows this perfectly. So looking at the monthly, you have the May low, which the weekly time frame shows to be a nice pivot. So on the monthly it's a naked level, on the weekly it is not. Same for the daily. So with this quarterly candle on AUDUSD, I think it's very hard to make an argument that it's gonna take out this high before it trades into the yearly open. So looking at the daily time frame, we have this naked level here before we broke below the May lows, and this level is important to me, and I like that price is showing respect to that level. So if price comes here, because it's not a naked level, it's been tested already, we know it's a pivot, and we might not get, because it's not the first retest of the level, we might not get a clean reaction, and it might squeeze higher. So if it squeezes higher, and I think it has a very good likelihood to squeeze into this low, from here I would add a blind short with a stop at the high, if I'm correct. And this is a massive head and shoulders pattern playing out. This is a swing short back towards the open, and I would consider this the first shorting area. If it goes according to my plan and it gets inside, back inside below this May low level, I would add another position here, and I would think that this we've seen the high of the July month, and we're gonna trade lower. So this is I'm just seeing a lot of moving pieces setting up, and it's pretty fucking cool. So on the last place, I wanted to cover New Zealand. I've been so wrong with this, because I thought this was going to trade lower the June month, and I missed this one-way move. Really, there was no opposition to this. However, just as it goes up, it could very well go down, and I would be, I mean, this could still squeeze higher into this high, form some kind of SFP here, and I would get short if that happened. But I think one can make an argument for price stalling just around here. If we get some sort of SFP, I would entertain a swing short on Euro New Zealand, mainly because we've seen prices move one way, and these SFPs at key levels, they just tend to be very clean entries, confirmation that we've exhausted the buying and the sellers are taking over. So I'm watching for better price action around here and the yearly open. Why here? Well, because this is a very clean pivot level. We've seen it from September, and here on April we had another beautiful SFP at that level. So it probably takes out that high, and we'll see how it behaves from there. But I favor maybe getting short around here. Only if we get bearish price action. That being said, that's the main component of this. We're not gonna blindly short this. EURAUD, I think it's looking interesting because we swept this low here with an SFP, and this is a weekly RSI divergence. So last weekly candle was a bullish engulfing. So I think EURUSD skewed to the upside, and it could very well trade into this high again. And from there, the play would be to look for again various price action. Ideally, you get a shooting star, various engulfing, something like that, just to get short. But I don't have a great my confidence on this is not great. I just think if I gun to my head, I think this is gonna remain range bound for a long time before we see any decent move. But who knows, right? Who knows? Just play level to level, really. And let's see if I can find a Bitcoin chart because I wanted to cover this. Just and this is gonna be quick. Again, I think the February monthly candle has been setting the range where we've been trading for the better part of this year. And again, just like we deviate it from the upper side, I think we could get something like this. Then this becomes your invalidation if we reclaim back inside the range and you look for a trade back inside a trade into the mid-range, especially because this was quite inefficient price action. So this will line up as well with maybe EURUSD getting bid and the dollar selling off. And from here, well, I have no fucking clue, but maybe the dollar picks up just like I'm expecting from the 100 level. If we get there, Bitcoin could, stall here and maybe make new lows again. So that was everything. And yeah, let's hope we don't make any fucking stupid mistakes this week. And yeah, let's make a killing this month. See you guys next week.